Good evening, everyone. This is Dr. Dan with iFund Traders. Today is Wednesday, December 15th, and I'd like to do the trade of the day lesson with you. The trade of the day was Broadcom this morning, and we had a very interesting situation. Broadcom was in a nice downtrend yesterday and didn't do much after the Fed announcement. And this morning there was quite a substantial gap down, and this first drop on Broadcom actually brought it into, okay, this area here on an hourly 200 period moving average, which is a fairly strong moving average and a decent area of support. So off the initial bounce, we noticed that we did not retrace more than half of this big red bar. And if we draw in the space on the gap and we consider this to be red as well, the bounce was very, very weak, even though it was a strong support area. So when you get a weak bounce off of strong support, you look to see for a retest if it's going to hold or if it's actually going to break. Now this scenario right here, this little green bar inside of this red bar, we actually look for continuation to the downside, and we call these green bars ignored. So the trade triggers and we get a short on the way. Now as we fall into the whole number 43, if Broadcom is going to continue to break down, it's going to have to get through that whole number, and we look for a break and a close, not just a penetration or a piercing of the whole number. So as this trade begins to move forward from here, we had some traders going short on this GBI. And if you'll notice the next bar, okay, we don't get much follow through. So the green bar ignored triggers and some traders get short. And then right here, the whole number, you see this? We barely tick through the whole number, but we don't close below it. We actually close above it. And now we have what we call a narrow range bar. And we have two other things that are important about this narrow range bar. Number one, the location item. All right, we're at a whole number after we just fell through some pretty solid support on an hourly chart, and we are well away from the 8 period moving average. Guys, look how far this entire drop after this huge gap. Now, granted, the gap will distort the MAs a little bit. Okay, but we were in kind of a little downtrending sell-off here, as you can see on the 5. If you look at your hourly chart, you'll see we were in a pretty good downtrend to begin with, and then we gap way away and just make a very, very fast move down. So on this narrow bar right here, all right, this was the call in the room today. We decided that, look, if we come up and over this narrow range bar, we're going to, if you're already short, you're going to cover and go long. And if you're not short, you're going to use this opportunity to get long, and we're going to play this as the counter trend move. We're going to look for the move back up. If it fails immediately after triggering, you're going to stop and reverse and go short on the continuation move, and we should get Broadcom to really sell off. So this narrow range bar, this small compact bar after such a violent move down, provides you with a very nice risk to reward opportunity. And in fact, in the room today, I made the comment that, guys, look, if you're going to do this trade, you're setting up for a very, very high reward if we get it right. Now, you never know for sure you're going to get it right, but this is the kind of trade that can give you 4, 5, or 6 times what you're risking on the trade because you have that narrow bar. And on a stock like Broadcom, you're not going to have too much slippage getting in and out to worry about eating into that profit multiple. Okay, so the call was over this bar's high. As soon as we trade over the high, we're going long. Stop under this bar's low. If the trigger immediately fails, you're going to stop and reverse and go short. And the targets are going to be, now guys, here's the nice thing about these small bars. Even if your target is very conservative, very short, and even if we're only going to make it back up to here, where we had this little resistance in the 43.50 and twice we tried to bounce and couldn't get over it, even if that's all we get, it's 2.5 times this risk. Okay, this is about 14 to 15 cents a risk, and you're looking at getting a 35 to 40 cent move just to get to here. So even though it looks to be a counter trend trade, it's the first half hour. The other thing we have working in our favor is 10 o'clock reversal time. All right, this bar is finishing at 9:55. So if we're going to get a bounce, whole number, reversal time, just fell through key hourly support after taking a big rundown for a few days, very extended from the MAs. This is the kind of trade where people get trapped trying to short this. It pierces the whole number and they start jumping short and then it immediately comes back. And I want you to think of the narrow range bar play as a deep breath or a compression of a spring. When you get a fast, violent move like this, far away from the MAs, and then it ends in a tiny little bar like that. Now, again, you can't have a bunch of small bars in a row. You want to see sizable bars, right? A break of some key support or a whole number like that, and then a tiny little bar. So you think of this move as the deep breath in, take a big, long, deep breath in, and then this narrow bar is that brief moment in time where you're holding your breath momentarily. Now, what's going to follow a deep breath in? Usually a deep exhale or a big breath out. So when these trigger and they follow through, the move is usually pretty substantial. But even going for the small first target here gives you over 2 times your risk. Then our bigger targets were going to be to get up here to the 20 MA, which at this point in time seems to be, kind of a very large target far away. You have to remember, as these bars start moving forward, this MA is going to move down. So ultimately, we looked for a target around 44 bucks for the big move. Okay, so we're going to get close to $1 move on a 15-cent bar. All right, now that's a pretty good risk. That gives you almost 6+ times your risk amount if you get it right. So we have the signal bar, the narrow range bar, and we're getting ready for the trigger. So let's go ahead and walk this through. All right, so as this came up over the high, this was our long entry. Nice green bar to follow through. And again, our first target we're looking for is just a modest, twice the risk, looking to take a third or maybe a half or whatever your individual plan calls for. But we're looking to take some target into 43.50. We get a nice 3-bar move up. Typically, we look for 3 to 5 bar cycles. And right in here, we hit the first target at 43.50. Now, the second part of this trade was right here at this moment in time. We discussed that if this low is violated, could be a potential sell setup. However, if there's a low that does not come back, if the low is violated and does not come back to our entry price, we're going to try to hold some of this position and look to add back the shares we already took, or just look to ride out the balance of the trade. And what we're looking for is this 8MA, what we call a hook. Looking for this 8MA to hook or catch the price. So a sell setup tries to trigger, doesn't gain any traction, starts to hold higher lows, and it literally forms like a little fish hook and then drives the price higher. And that's going to get us up towards our bigger target of 44. So as we're in the trade, we're looking for the hook to form. You get this narrow bar. Okay, now here's a little red bar. So you're not really taking out this low. You haven't triggered a sell yet, and you can see this 8MA starting to flatten out. Right here, you're getting that early sign of the MA trying to catch or hold or stop price from falling. Now again, you never violated this bar's low. Even this little pierce of the 8 here never took out that low. So if you can clear the highs, if you can take out this pivot, you can add back the shares you sold, or if you didn't sell any shares, this is a chance to do an add and reduce concept. You can look to take the profits you've made on this trade, use them to buy more shares. Now, when you do this, if you were going to, for example, you look here, the price is 43.50 is going to be a pretty good trigger. So if the price trades over 43.50 and you didn't take any profits on this first move, you look to actually buy more shares with the intent of getting up to your next target. And you can pick an intermediate target of 25 cents to get to 43.75, or just go for this whole number or the 20 MA. Now, when you do that, the key is this. Do not add so many shares that your new average price is more than where the stop would be. So if you're looking at using this as a stop, say 43.25, and your entry price was down here 43 in the low teens, you don't add so many shares that your new average cost would be 43.40. Right? You don't want to buy at 50 and have an average cost right there, and now the whole profit gets taken away if it even hiccups to the downside. All right, you want to, at the most, okay, this is my suggestion to you, at the most, you want to add the shares that brings your average price to just below where you would take a stop. And now you're kind of saying, look, I'm going all or nothing on this. Either I'm going to hit it big and I'm going to juice up this trade and get the whole big target, or I'm going to lose nothing. I'm going to have about a break even. So you're basically willing to take some of the profits that you had, risk that on top of your next entry, and the worst case is a break-even stop out. So you went from an initial risk, improved your position to more shares, but a break-even worst case stop out. Now, if you sold some into the 50 area in the first place, you do the same concept. You add those shares back in when it trades back up over 50, and you now bring your new stop on the position up here to underneath this bar's low, and you go for the bigger target. All right, so that's the two ways to handle this. The key was identifying it back here before it happened. Okay, so in this point in time is when we said we're going to look for this 8MA to turn, look for it to hold, and we're either going to do the add and reduce or we're going to add back if we've already taken some profits. Okay, so you get the sideways action and then a beautiful trigger with very nice follow through. The intermediate target at 75 was hit. You now look for another bar to follow through and you start trailing your stop. And then we finally had a beautiful bar go right through our target. So we hit 44 with no problem, finished with a big green bar. At this point, most traders were done with the trade or had brought their stops away from the 8MA and got them up here underneath the whole number at 44. Now, if it can hold itself above the whole number and the 8MA can catch up, you can stay in the trade and see if you get a high of the day taken out, and maybe it keeps going and you get a big gap fill run. But this is a pretty nice trade at this point. If you look at our original risk, we're up over $1 on 15-cent risk. So very nice trade overall. Here comes the bar by bar. This would be a stop out. If you were using 44, you got shaken out. So most people were pretty much done at this point in time. Now, for those that were holding on, and the 8 was really far away, for those that were holding on for the 8MA to break, it allowed them to ride it a little bit longer and then eventually stopped them out in pretty much the same location. So there wasn't a whole lot of extra profit on this particular trade holding in the 8, but we're already up over $1 on a 15-cent risk. So however you trailed out this trade, it worked well. And whether you did the add and reduce here on the hook or you just added back the original shares you sold off for that first profit, the trade worked out great. So guys, again, the power of a narrow range bar. Okay, look at this kind of a follow through after this much of a decline, and it all turned on that little tiny bar. Okay, so I hope you enjoyed today's trade of the day, the power of the narrow range bar, and we look forward to seeing you at the next lesson.